When interest rates rise, it feels like a storm rolling in. Borrowing becomes expensive. Debt tightens its grip. Dreams get delayed. Most people respond by shrinking, cutting back, waiting it out, hoping for clearer skies. But the wealthy, they don't wait. They prepare. They don't just survive the storm, they use it to map the next move. This video isn't about predicting the weather. It's about learning how to build your shelter, chart your course, and climb when the winds shift. Because when interest rates drop, the rules of money change, and those who are ready rise faster than anyone else. Imagine walking through a dense forest of financial noise. Headlines, opinions, fear. Suddenly, behind a waterfall of distraction, you find a staircase. It's golden, it's quiet, and it leads upward. This is how the wealthy see interest rate drops. Not as a break in the storm, but as a hidden path to acceleration. Each step is intentional, refinancing debt while rates are low, shifting assets into growth vehicles, and rethinking how money flows through their lives. They don't wait for the crowd to notice, they move early. They climb while others rest. And here's the truth. That staircase isn't reserved for the rich. It's just hidden from those who never learn to look. Let's break it down. When interest rates drop, borrowing becomes cheaper. That means businesses can expand, consumers can spend, and investors can leverage. It's like turning gravity down. Money flows faster, assets inflate, and opportunities multiply. Real estate prices often rise. Stock markets rally. Debt becomes easier to manage. But here's the catch. If you're not positioned before the drop, you're chasing the wave instead of riding it. The wealthy understand this dynamic. They don't just watch the dominoes fall, they set them up in advance. They know that every rate cut is a signal, a shift in the game. And they're already playing the next move. Think of wealth building like chess. The average player waits for the opponent's move. The master plans 5 steps ahead. When interest rates drop, the rich aren't reacting, they're executing a strategy they built months ago. They've already refinanced their mortgages. They've shifted cash into growth assets. They've locked in low-interest debt to fund expansion. They're not surprised by the drop. They're prepared for it. And here's the mindset shift. You don't need millions to play this game. You need awareness. You need timing. You need to stop reacting and start positioning. Because in finance, the early mover isn't just smarter, they're richer. Let's open the backpack. Inside are 3 tools the wealthy use when rates drop, and you can use them too. Offense, this is your growth strategy. Invest in assets that benefit from lower rates, stocks, real estate, even your own business. When money is cheap, expansion becomes affordable. Defense, protect what you've built. Inflation may rise, volatility may spike. Use hedges, diversify, and stay liquid enough to pivot. Efficiency. This is where most people miss out. Cut high-interest debt. Refinance loans. Optimize your cash flow. Every dollar saved is a dollar that can be reinvested. These tools aren't flashy. They're quiet, but they're powerful. And when used together, they turn a rate drop into a launch pad. Here's the truth. Most people wait for confirmation. They want to see the headlines, hear the experts, feel the crowd move. But by then, the opportunity is gone. The wealthy act on conviction. They study patterns, not predictions. They move in silence, not in celebration. This isn't just about money. It's about mindset. Are you waiting for permission or ready to move? Because the climb begins before the sun rises, and those who start early reach the summit before anyone else even laces their boots. Let's get tactical. You don't need to be rich to prepare. You need a map. 1. Audit your debt. Look at every loan, every credit card. If it's above 6 to 7%, explore refinancing. Lower rates mean lower payments and more breathing room. 2. Reallocate savings. If your money is sitting in a low-yield account, it's losing value. Consider moving it into assets that grow. Index funds, real estate, even high-yield savings. 3. Build income streams. Use cheap capital to fund a side hustle, invest in skills, or start a small venture. When rates drop, the cost of starting drops too. These steps aren't glamorous, but they're transformative, and they're available to anyone willing to act. Every time interest rates drop, the headlines call it a gift, a relief, a magic trick that makes money cheaper. But here's the illusion. Lower rates don't make everyone richer. They just shift the rules. And those who understand the game, they rewrite their playbook. While the crowd celebrates, the wealthy reposition. They don't chase the floating coins. They build systems that catch them automatically. Don't be dazzled by the rate cut. Be the one behind the curtain, quietly rearranging your future. When rates drop, the headlines scream. The crowd cheers. But the real winners are silent. They've already made their moves. They're not reacting. They're collecting. The quiet strategist doesn't chase hype. They build systems. They execute plans. They profit while others celebrate. This is your invitation to become that strategist, to stop watching and start building. Because wealth isn't loud, it's deliberate. Remember the staircase? The one behind the waterfall? The climber who moved early is now at the summit. They didn't wait for the crowd. They didn't need applause. They just climbed. And now they're ahead, financially, mentally, emotionally, because preparation isn't flashy. It's quiet. But when the moment comes, it's unstoppable. This is your moment. The rates will drop again. The staircase will appear. Will you be ready to climb? Interest rates don't move in straight lines. They rise, they fall, they repeat. It's a cycle and it never sleeps. Most people try to time it, waiting for the perfect moment to jump in. But by the time they act, the wheel has already turned. The wealthy don't chase timing. They build systems. They prepare for every phase, the highs, the lows, and everything in between. They know the cycle isn't a threat. It's a rhythm. And if you learn to move with it, you don't just survive the shifts. You grow through them. Your goal isn't to predict the next turn. It's to be ready for all of them, because the cycle never sleeps, and neither should your strategy. Interest rates will drop again. The question isn't if, it's who will be ready. You don't need wealth to prepare. You need awareness. You need courage. You need to see the staircase before the crowd. So here's your move. Audit your debt, shift your assets, build your strategy. Don't wait for the headlines. Don't wait for permission. The climb begins now. And if this video helped you see the game differently, subscribe.